Well, Jindal saw reported a rather good set of numbers. The stock, though, has seen a big run in the last 1 year or so, and that's why it's consolidating a little bit. We have Mr. Neeraj Kumar, the Group Executive Officer and Whole-Time Director of the company, who joins us on the show. Hi, Mr. Kumar. Good morning, and good to finally see you in. We have not had you on the channel for a long while, but your numbers have been looking up. As of the 9 months, you've already done more than 15,500 crores. Given that Q4 is the best, what should you end this year with? A number closer to around 22,000 crores? Is that possible? And what kind of a revenue guidance can you give us for FY25?
Good morning to all of you. Yes, for the last few quarters, every quarter we have been setting up a benchmark, and in the next quarter we have been surpassing that. We are almost certain that the fourth quarter would be better than the third quarter, as has been the case with us, because last quarter you have a lot of government contracts, the budgetary pressures, so we can expect year-end again would be a record, the best ever for Jindal SAW. You have asked about the guidance for future. You would see our current order book is about $1.4 billion. Now that's a sweet spot. That gives us enough order book, enough visibility for next few quarters, and also gives us the kind of time to execute those orders in time as the sales funnel keeps on filling. So at present, we have a momentum behind us. We are happy with our performance because the revenue is very well diversified. If you see water sector, oil and gas, industrial is very well balanced. It's also balanced on the export as well as domestic. So,
okay. Mr. Kumar, let's get a couple of numbers going then, sir. We appreciate you sounding quite optimistic about the business. So a few numbers. As you said, you've got a good order book, so things should look good. And just by going by what you're saying, you're already at 15,500 crores. Q4 will be better. So I'm extrapolating that number and saying that you'll do closer on 21,500, 22,000 crores. Mathematically, I think that's possible. On that sort of a base, what will you grow? Point number one. And your margins are at around 17%. A few quarters ago, they were less than 10%. What is the sustainable number out there?
Few quarters back, we were caught in a very bad commodity cycle, which is largely our raw material, which is the coal prices. They were very volatile. Iron ore prices were very volatile, which have kind of now settled and now are moving in a corridor and they are moving in a band. So the margins have improved. So we believe that our margins should stay in the vicinity of where we are. Obviously, it is caveated upon that the commodity prices or the raw material prices that we have would continue to be stable, and we would not see the kind of volatility that we saw in the commodity prices last year or so.
Got it. Mr. Kumar, hi, good morning. So you spoke about how your current order book is about $1.4 billion. Can you tell us about exports? What percentage of that is coming from the export market? And are exports lucrative for you? Do you have any order visibility over there over the next 12 to 18 months?
At present, the revenue breakup, if you see between export and domestic for this quarter, it has been about 65-35. And we expect that, yes, the exports would remain, range bound between 30 and 35%. We do have a few very good orders, and we expect that we would be able to execute them. The only concern which is not impacting as yet, but we do have a concern, is the conflict in the Middle East.
Yeah.
Because that might, if the shipping channel is, disturbed, so then anyway, our products don't face any risk because this is not an oil and gas or this is not a commodity. So, but if the transportation, the shipping is disrupted, then this is one risk that we are watching very closely.
Got it. So you're saying 30 to 35% currently comes from the export markets. You said you have good amount of orders. Can you just quantify what is the order book in the export market currently? And have you already seen... Yeah. Okay, fine. Got it. So 30% of it. Got it. Have you seen any rise in freight rates which has impacted your export business, and do you think that could put any pressure on margins?
Not yet, but we are watching the market very carefully.
Okay, so this 17% margin that you have delivered, it should stabilize in the vicinity, say, of around 15 to 16%, give and take everything?
Yeah, with all those uncertainties, if you factor in, we definitely should stabilize upward of
15%. So this 17.5% appears a best case scenario that has played out. And from now on, we could pull back 50, 100 basis points, right?
Yes, I am only saying upward of 15. So unlikely it will go below 15, but we would try and maintain it as high as possible, because now we are also getting the benefit of some of the high value add products that we are selling in Jindal.
Okay.
So we have got benefit of that as well.
We have got one number out of the way, sir, so that's pretty good. I'm looking at your net debt. It's come down from around 5,200 crores to around 4,750 crores. So your internal cash flows have improved, and that's helping you pay down some debt. Where is this number headed? Will it continue to slide down, say, in the next few months, given the kind of cash flows that you're going to generate? Will it come down further? And also, do you have a plan for a QIP? I think you have an enabling resolution. Should we hear about that in the next month or so?
Okay, you have asked two questions. The debt level will continue to taper down. That's very strictly monitored and managed. So the cash flows that we have would go towards the regular capex. We have a few projects which are essentially going to just improve the efficiency, do some capacity balancing, and the rest will go towards debt reduction. The QIP, as you have rightly picked up, is an enabling resolution. We have not put the QIP on a calendar as yet, but we have already declared to everybody, including the stock exchanges, that whenever it happens, the proceeds would be used to lighten the balance sheet, reduce the debt further. The idea is to get a light balance sheet, keep it ready, keep it prepared, the way our order book is following, the way our sales funnel is happening, if need be, because our business is such that trade finance actually runs parallel with our operations. So
if you can, sir, sure, got it. So when you say debt level will taper down, you're currently at around 4,700 odd crores. How much do you plan to bring it down to over the next, say, 18 to 24 months?
18-24 months, we will try and bring the term debt, because see, working capital debt is, as I told you, because of the nature of our business, trade finance, it keeps on tracking, and it has a correlation to the size of business that we do. But term debt, we would definitely like to come down to say around 1,000 from the 1,800 that it is in the next 18 to 24 months.
Okay, Mr. Kumar, final question before we let you go. Just tracking back our last interview where you spoke about that JV you had announced with Hunter, and you're in process of getting some approvals. For FY25, what can this JV contribute and at what margins? Very quickly, sir.
Okay, the JV is with Hunting Energy, which is one of the US giants premium connection. We are very satisfied and we are happy that now the API audit has been conducted. The results should be out very soon. We have not had any major comments from them. The license is getting signed, and we are also, the way the order book, the way the market looks in the first year of operation, which is 24-25, full year of operation, the JV would be profitable. It would make a positive contribution to the plant. It will make a positive contribution to the company at a PAT level.
Okay, all right. We would like the revenue number as well, but maybe that for another time. Appreciate you joining in, Mr. Kumar. Business is looking up. Only problem is the street is a little bit nervous, I think, post the recent run and because of the exposure to the Middle East as well.